Comparing two software options side by side. An AI voice continues from here. When it comes to pricing, Charles Schwab positions itself as a low-cost, mainstream brokerage designed to remove most visible trading friction for everyday investors. Listed US stocks and ETFs trade with zero online commissions, which immediately puts Schwab in the same pricing league as most modern discount brokers. Options trading also carries no base commission, but there is a per-contract fee that applies on each trade, which becomes noticeable for active options traders scaling volume. Mutual funds through Schwab's OneSource platform can be traded without transaction fees, while non-participating mutual funds may incur purchase charges. Bonds and treasuries are generally commission-free online, with pricing built into the spread rather than shown up front, which simplifies execution but reduces transparency for more advanced traders. Futures and futures options are available, but priced per contract, making Schwab usable for derivatives, though not aggressively priced for high-frequency trading. Account-level costs are where Schwab becomes particularly appealing. There are no account opening fees, no maintenance fees, and no minimum balance requirements across most brokerage and retirement accounts. This makes Schwab extremely accessible for beginners, long-term investors, and retirement savers who want flexibility without worrying about penalties or inactivity charges. For managed investing, Schwab Intelligent Portfolios offers automated portfolio management with no advisory fee, though a cash allocation is required, which indirectly affects returns. Premium advisory services introduce percentage-based management fees and higher minimums, clearly separating self-directed investors from wealth management clients. Feature-wise, Schwab delivers a broad, all-in-one investing ecosystem. Users get access to stocks, ETFs, options, mutual funds, bonds, treasuries, CDS, futures, and international markets from a single account. Research tools include market insights, screeners, earnings data, portfolio analytics, and third-party research integrations that cater well to fundamental investors. Schwab's trading platforms are stable and beginner-friendly, focusing more on reliability and clarity than aggressive customization. Mobile and desktop experiences are clean and consistent, with strong customer service backing through phone, chat, and branch access, which still matters to many investors. The strengths of Charles Schwab are clear. Pricing is simple, predictable, and beginner-friendly. There are no hidden account fees, no pressure to maintain balances, and excellent support infrastructure. Schwab excels as a long-term investing hub, retirement platform, and diversified portfolio manager. However, there are trade-offs. Active traders may find options and futures pricing less competitive than specialist platforms. Advanced charting, automation, and strategy testing tools are more limited compared to professional-grade trading platforms. Execution speed and customization are solid, but not designed for high-frequency or systematic trading. Schwab is optimized for stability and breadth, making it ideal for investors who value consistency, trust, and long-term portfolio management over short-term trading edge, especially those focused on wealth building rather than rapid trade execution. Robinhood approaches pricing with a radically simplified, mobile-first philosophy aimed at removing barriers for new investors. Stocks, ETFs, and standard options trades are commission-free, and there are no account opening or maintenance fees. This zero commission structure is one of Robinhood's core selling points, making it highly attractive to beginners and casual investors who want straightforward access to the market without worrying about visible trading costs. However, while commissions are eliminated, regulatory and pass-through fees still apply. Sell orders may incur SEC and FINRA trading activity fees. Options trades are subject to regulatory and exchange fees, and ADRs can carry custodial charges from issuing banks. These fees are industry standard, but often overlooked by newer traders because they are not labeled as commissions. Robinhood does not currently support the same breadth of asset classes as traditional full-service brokers. Futures trading is not available, and bond investing options are limited compared to legacy platforms. Instead, Robinhood focuses heavily on equities, ETFs, options, and crypto access, packaged in a simplified interface. Margin trading is available, but it is tied to subscription tiers like Robinhood Gold, which also bundles higher instant deposit limits, professional research tools, and improved margin rates for a monthly fee. This introduces an indirect cost model where advanced features are gated behind the subscriptions rather than per-trade pricing. Feature-wise, Robinhood is built around simplicity and speed. The platform is designed for ease of use, with a clean mobile interface that prioritizes quick order placement and real-time price visibility. Fractional shares allow users to invest with very small amounts of capital, lowering the entry barrier for new investors. Options trading is simplified with visual payoff diagrams and streamlined execution, though it lacks the deep analytics, risk modeling, and customization found in advanced trading platforms. Educational content, notifications, and in-app prompts are designed to keep users engaged rather than provide institutional-grade analysis. Robinhood's strengths lie in accessibility and ease of use. It excels at onboarding new investors, enabling small dollar investing, and offering a frictionless trading experience. However, the limitations are significant for experienced traders. Advanced charting, strategy testing, and professional-level analytics are limited. Order routing transparency has historically been controversial, and execution control is minimal compared to platforms built for active trading. Looking at third-party sentiment, Charles Schwab currently holds a 1.6 out of 5 Trustpilot rating based on 646 reviews, with many complaints focused on customer service experiences, account transitions, and administrative processes, rather than core investing functionality. Robinhood holds a 1.3 out of 5 Trustpilot rating based on over 4,100 reviews, with negative feedback frequently citing customer support delays, account restrictions, and platform reliability during periods of high market volatility. As with most financial platforms, Trustpilot ratings should be treated as directional sentiment indicators, since dissatisfied users are more likely to leave reviews than long-term passive investors. Final takeaway: if your priority is long-term investing, retirement planning, and a stable platform with broad asset coverage and strong support infrastructure, Charles Schwab is the better choice. If your goal is simple, mobile-first investing with zero commissions, fractional shares, and an easy entry point into the markets, Robinhood offers unmatched accessibility. The right platform depends entirely on your experience level and how complex your trading needs are. If this breakdown helped you choose the platform that actually fits your investing style, hit like, subscribe for more honest brokerage comparisons, and click the link below to access the platform that aligns with how you trade, invest, and build wealth over time.